trades at a different exchange. It's incredibly expensive to access. It's incredibly expensive to trade, and it's a big product. So I've never traded much of it. I've always traded, and it's interesting because sometimes people miss this point. I'm going to trade euros, whether it be 6E or 6B for the pound. A lot of people starting out don't realize when I'm buying euros, how I'm paying for that with dollars, or I'm selling dollars. So, every currency transaction is two transactions. It's buying one currency and funding it or selling the other. So you're absolutely right, Mike. And when you start thinking about it that way, doesn't make it more complex, but then you can start thinking about, I've got the euro up front as my base currency. The quote currency could be anything. It could be sterling. It could be Canada, euro, sterling, euro, Canada. It could be any of this. So you can mix and match all these different pairs. So I am still someone who trades a lot of the outrights, a lot of the crosses. But what I like, and when I use crosses and pairs, what I mean by crosses, I take the dollar component out. I buy euro and sell pounds. And if you remember your basic fractions, when you do that, you cross out the dollar component and you have euro and sterling. I put together some of those baskets with an idea and a bias, but the other parts of the basket is defensive. Now, having a dollar index, which includes 7 of those currencies that I'm trading either individually or on a pairs basis, affords me another kind of tradable opportunity. And a hedge is used so often in different ways, but in my mind, it's a hedge. It's a way to tailor that exposure. So I don't know if that becomes a hedge or a bonus trade or another way to optimize your strategies. But it's important. And I love this chart because, Mikey, are we rich? Well, not where we were in April 2020. Are we, as you said, a 5% bounce in FX is a big bounce. Now, we talk about markets that drive, and I think in the U.S., especially U.S.-centric traders, first thing they touch are equities, whether it be ETFs or equities. We talk about the importance of trading interest rates, but the market that trades, FX trades $3 trillion a day. Now, that's far more than NYSE and NASDAQ trade every day in nominal amounts. So you think about engines that drive trading, FX is a huge one. So with that number, you start to think, okay, diversification, got my equities where I started, but where do I find independent occurrences? And it's within this currency environment. And just for me as a trader, sure, big moves from the highs to the lows, but look at just in this year alone, all the back and forth. Now, the scale of that, you think that's not tradable, but if we just took that 2020 piece off and we looked at this, you would see a lot of back and forth that's tradable. Where if you look at the equity indexes, that's not back and forth. I mean, that is violent 9 days straight up and maybe 1 day down 2%. But that's a tough tradable range. Big range, yes. Tradable back and forth, no. Here you got tradable back and forth, which is really interesting. If you want to trade currency and you want to remove selection dilemma, which is, do I trade the euro, do I trade the sterling or Canada? Small dollars is your place to start. And it gives you that holistic dollar exposure, whether or not you want to be long the dollar or short the dollar. So I'm going to stop preaching now, but it's a very complementary piece to anything you're doing in FX.
I love that you bring up the fact that you can pull out the individual components, but this is the pure kind of representation. And we're going to dive into the many ways to gain US dollar exposure in this presentation. And as you allude to, you could trade any of the majors and short them and be inadvertently long the US dollar, or I guess directly long the US dollar against them. And here I've just plotted 3 of the what I would call most popular options to trade US dollar across a variety of trader types and personalities. In the green line here, we have the small exchange US dollar index and the future that so tracks that. Again, it's a basket of foreign exchange pairs weighted against the dollar. In the blue line, we have UUP, which is very similar to the SFX, but this is a exchange traded fund. So it feels a lot more like a stock. But you can see, again, it's tracking FX pretty much spot on. And then finally, moving inversely to the value of the US dollar is that actual euro future. And it's moving probably negative one correlation to the US dollar because euro is the largest component in that FX basket. But each of these come with their own unique kind of pros and cons. And I think it's important to know each of them. The biggest ones for me being the size, the margin, and the daily scalping opportunity or the move in each of them. Right. And I think that SFX offers a really clean middle ground here. Yeah. I mean, you compare the sizing first off versus UUP. That ETF, in all the time trade I've been trading, I think it's been $25 for, I don't know, 8 years or something. Yeah. It really doesn't afford you scalping opportunity. I'll say that. And part of that is because it's margined so heavily. To trade any of these stocks or ETFs, you're putting up 50 to 100% of that size. So you really need to have a pretty big account just to pull a few dollars out of there. I mean, it's moving 8 cents, trading 100 shares.
Markets are wide. There's not a lot of unique price points. The options are terrible. And, you know, sometimes a basket lowers volatility in those unique price points. So at smalls, what we wanted to do is make a dollar index that was more relevant. So unlike this trade-weighted dollar index, UUP, which, again, I'll run through it. You're right. Euro is the biggest component. Sterling, yen, Swedish krona, and Swiss franc. The Swedish krona, I've never quite understood why, but hey, it is what it is. So different dollar basket. We're here in SFX. We include Canada. We include Aussie. We include the Chinese renminbi, which is a really interesting piece. So you're bringing in something, and I think this is kind of, does this slow down the pace of all those different pairs? It does a little bit, but I think it's a trade-off. I'd rather have the unique exposure and understanding that, yeah, it slows down a little bit, that's fine, but you're getting unique exposure where you really don't do that in UUP.
Yeah, and those constituents making up SFX are chosen specifically because of their large GDPs and their actual spot FX traded volume. So you're actually getting a representation of US dollar that's representative of like what's going on in the world. I mean, kudos to Swedish krona, but I think that was maybe some poor foresight on the index construction there. But then just going back to the opportunities and beyond the composition, we look at size and we look at movement here. SFX is not necessarily a tiny product, notionally $14,500, but because of the lower volatility in foreign exchange and those 7 components kind of buoying out the SFX volatility, you're getting a dollar move of $40 a day. And it's only margined at 1 to 2% of that notional value. So you can trade a whole basket of foreign exchange for about $170 in the Tastyworks platform, which is going to be, I mean, much cheaper than the comparing Euro outright futures, which are 150,000 in notional, moving about $400 a day, and even less than the actual micro Euro futures as well. And you don't have to worry about tick components and selling euros when you're bullish on dollar and all the inverse calculations and computations that often go into putting on a more traditional FX pair. So very nice. There is a dollar index from a competing exchange, but it's very big and it's not available on Tastyworks, and there's market data costs at other places. SFX is a really nice, clean alternative. And then I just want to take the final step here and actually look at some of the components making up this dollar product.
Because you know what, I think this is a good one. We always and there's some brilliant minds like Mike who build product at smalls, and we can go down a collective rabbit hole of cool stuff, but we always go back to the axiom. I can't explain the product in 3 sentences. We're building too complex a product. And holistic dollar exposure is all you got to say, and that's what you're getting here. But run through where we're looking at, Mikey, and a little bit of construction. I think it helps to understand. Does it change the way we use it? No, but not too much understanding. Too much takes you down a rabbit hole and actually kind of paralyzes you. But run us through what it is.
Sure. I just want to keep it in context of trading opportunities. So highlighting the two largest components making up this small dollar are euro and Chinese renminbi. Now, as it currently stands, there's not a good tradable product for Chinese renminbi, but there are many awesome products for trading the euro. And this presents a lot of awesome and unique opportunities for trading FX or a US dollar product versus that single currency pair like the euro. So we mentioned the CME Euro futures, the micro Euro futures. There's even an FXE, which is an ETF that tracks the value of the euro. Those really set you up nicely for potential spread trades between the small US dollar future and those individual components. So if you're trading SFX, you can maybe hedge against with some euro component, or yens and British pounds, Canadian dollar, Aussie. Actually, all of these other currencies have very nice comparable futures and ETFs that allow you to put on a spread. If you want to get creative as well, you can even use the options in some of those components against the SFX. We are hoping to have small dollar options on our own product very shortly. It's coming just around the corner. But in the meantime, it's pretty neat what you can do and get really creative with the small US dollar product. Pete, do you often look at small US dollar versus some of these components? How do you view some of those trades? You ever had the options on top of them?
You know what, I do. And for me, premium plays around it are very interesting. You accept, just the options depending on how the individual currency pairs are moving. Aussie, options, euro options, sometimes sterling options were great complementary pairs when sterling was moving all over the place. You need to understand that you're now adding a dynamic delta, not a static one. So when you hedge, you will build a ratio, but with that option, depending on the way the market moves, you'll start to lose part of that hedge. But as long as you understand that piece, it's definitely complementary. And it's funny because, Mike, you started with just the holistic dollar exposure, the binary nature of being long or short dollars. Then you talked about the next iteration, which is specifically picking apart in a productive way different components against that holistic dollar exposure. Then the third level is picking them apart using premium and options. You can see here in terms of different occurrences and different strategies within the same asset class. This is one that, sure, equity index, you do the pairs trades, yield curve, treasuries, you do the yield curve. But talk about tradable opportunity here. Boy, there's a whole bunch. And I can't tell you how happy I am you brought this segment up, because this is something that we can go back to and start to build some strategies around and expand that list of tradable opportunities. None of it's overwhelming. Don't rush to put it all into place, but you're going to find there's some really cool pieces if you have the collective basket, the individual components to trade that are sized properly, then the options to trade on top of that.
Yeah, exactly. You can shop around for the highest volatility individual currencies. I remember a while back, right around Brexit, IV in the British pound, for example, was significantly higher than in euros. So if you wanted to add a short premium component, you would choose something in the British pounds over the euros. You can really take this product from a beginner binary trade to a pretty advanced currency cross. And I think the liquidity is absolutely supporting it now, and the size is appropriate for a variety of uses. And it just enables basically a blank canvas of creativity for FX trades. And I really appreciate you jumping on with me today because of your background in FX. I think it's always a really insightful conversation when we're talking about
it. It is fun. You know what? I do love it. I trade it. I think for me it was a great place to start, just circumstance, and also it truly is something that affords you so many tradable opportunities. So adding these other pieces, treasuries and crude and gold, are important pieces, but you can see within this world, it's very doable. Yes. And the basket actually is the elegant component that makes it all doable. So that's what's really, really exciting. So thank you, Mikey. I so appreciate you including me in this segment, because it was really fun to walk through FX. You're right. Your first love is always is always one that sticks with you.
Good to hear. And we're happy to have you here. And that's going to do it for us this week. Thanks so much for joining us, Pete. Thank you, everyone, for tuning in and watching Small Stakes on the Tasty Trade Network. I guess we'll be back next week. Don't close your platform yet. There's still a bunch going on in the markets, everything from crypto to commodities to stocks. So don't close it yet. Hang in there, and we'll talk to you soon, everybody. Have a great day.